Hello, this is the TradeSite US Forex or International Forex Market Preview and International Economic Roadmap for the week beginning Sunday, June 2nd and ending Friday, June 7th, 2019. Hope you had a good trading week. Been really boring here in Forex. This was the most boring month of May. I just tallied the results. One of the worst months we've seen, less trades triggering than any month that I remember. No follow through on any one trade. We did have a good win ratio, which is the only thing that kept us about break even. But this has just been horrible. I mean, this is not what we want out of the Forex market, and there's not much else to say. Here's the dollar index daily chart, and you can see we've gone nowhere. And let's just go through the major daily charts real quick. Then we'll look at the intra-week action, and then we'll talk about the data that's coming out in the week ahead. So here's the euro dollar, which is the inverse of the dollar index. Here's the pound dollar. Dipped a little bit this week, but the ranges were so horrible. As you'll see, it doesn't really matter. It's not a tradable environment. The Aussie dollar spent the whole week in a 50 pip range. You'll see that. Look at that. Look at the daily chart right there. That's just disgusting. Euro yen broke new lows, but only on Friday. The rest of the week was boring. The pound yen also broke late because the yen moved. Pound Swiss dipped a bit. New Zealand dollar didn't do much. All right. In terms of intra-week action, here's the 30-minute candles on the euro dollar. High to low for the week, the entire week, is not even 100 pips, or basically 100 pips. Remember, this thing usually trades 130 pips a day high to low, 100 pips for the whole week high to low. Not a tradable environment for us. Pound dollar, again, this trades 130 pips a day, trade 180 pips for the week, which looks a little better, but honestly, it was very limited action, especially if you take out the Monday move, then from Tuesday on is about 100 pips for the rest of the week. There's just nothing there, and there's not much to do. We had a couple small winners, a loser, and then a couple days where no trades triggered at all, which is not what we like to see. All right, so what does that mean as we start June? New Zealand starts the month on a bank holiday. Australia goes to the AIG Manufacturing Index number at 6:30 p.m. Eastern Time on Sunday. Capital spending and final manufacturing PMI out of Japan. MI inflation gauge and company operating profits out of Australia. Caxton manufacturing PMI out of China at 9:45 p.m. Eastern Time on Sunday. Commodity prices out of Australia going into Monday. Swiss CPI, Spanish and Swiss and European and Italian, French and German manufacturing PMI numbers, along with the broad European sector, and then the UK same. And then the same here in Canada at 9:30 a.m. Eastern Time on Monday. Here in the US, same number as well. And then the ISM manufacturing number here. Construction spending also there. Overseas trade index out in New Zealand at 6:45 p.m. Eastern Time on Monday. Retail sales monitor out of the UK. Monetary base out of Japan. Australia's got their retail sales number and current account at 9:30 p.m. Eastern Time Monday night. 10-year bond auction out of Japan. Rate announcement out of the Bank of Australia. Spanish unemployment change. Italian monthly unemployment rate. UK's construction PMI. Europe's CPI flash estimate and unemployment rate. We got factory orders out of the US. GDT price index out of New Zealand. AIG services index out of Australia, along with their GDP number. China's Caxton services PMI. Spanish, Italian, and French, and German, and final broad European services PMI, and then the UK numbers. They're all within an hour going into Wednesday here in the US. PPI out of Europe, along with retail sales. The ADP non-farm employment number here in the US at 8:15 a.m. on Eastern Time on Wednesday. Labor productivity out of Canada. Final services PMI out of the US. Crude oil inventories in the beige book here in the US. Trade balance out of Australia at 9:30 p.m. Eastern Time Wednesday night. German factory orders. Final unemployment change out of Europe and the revised GDP number. French 10-year bond auction. Challenger job cuts here in the U.S. Monetary, there's a rate announcement out of the Bank of Europe. The ECB trade balance out of Canada. Revised non-farm productivity and the trade balance, the regular trade balance number out of the U.S. That's one of our big three, so we'll be half size ahead of that. And the weekly initial and continuing jobless claims number, all Thursday morning at 8:30 a.m. IVPMI, natty gas out of the U.S., average cash earnings out of Japan, along with household spending. China's got their bank holiday. Australia's got home loans. Japan's got leading indicators. Swiss unemployment rate. German industrial production and trade balance. Same with France. Then foreign currency reserves out of Switzerland as we're into Friday. Halifax HPI out of the UK. Italian retail sales This is a lot of stuff this week. Consumer inflation expectations, and then the U.S. our big unemployment rate and the 80 and the non-farm payroll number. Same with the Canada, and then final wholesale inventory. So we've got another big number Friday. So Thursday and Friday we got big numbers of our big three. So we'll be half size ahead of both of them. We've also got some rate announcements out of Australia and the ECB this week. Charts, as usual, brought to you by eSignal. If you've not yet taken a trial of our services, feel free to do so. We will help you out for a couple of weeks. Have a great trading week.